All right, well, the Fed begins its latest two-day policy meeting in Washington, D.C. this afternoon. And later this afternoon, Yahoo Finance's Cheung will be on his way to the Capitol ahead of tomorrow's policy announcement and the press conference with Fed Chair Jay Powell. Brian joins us now from the newsroom to discuss what we're looking for tomorrow. So, Brian, let's just start high level. What are some of the headlines that economists are anticipating to come out of tomorrow's statement and then the press conference?
Yeah, well, the headline is basically that there are no rate hikes expected. It's basically been off the table for at least the first half of this year. We've heard a number of Fed officials say in the past few weeks after the January FOMC meeting that they need to be patient and data dependent as they continue to work out observations over muted inflationary pressures and also geopolitical concerns abroad. So the Fed is basically messaging that it won't raise rates in this particular meeting that will wrap up tomorrow. We have seen the Fed funds futures, as I checked this morning, was about 98.7% chance that they will keep rates at the current levels of 2.25 to 2.5%, although there are a few folks that think that there could possibly be a rate cut, although that's only a 1.3% chance as of right now.
Now, tomorrow is the first time we'll hear or we'll get new Fed economic projections. We haven't gotten those since December. We'll get a new dot plot, which is basically the forecast that Fed officials have for future interest rates. Any outlook on what we might expect to see there? Because if you go back to the end of 2018, the dot plot indicated that 2 or 3 rate hikes were appropriate. In 2019, it would seem a significant cut, a derating, if you will, of the dots would be in order tomorrow.
Yeah, well, I just got off the phone with one economist who said that although he doesn't expect the dot plots to signal any sort of rate cut in the future, he does expect a downward revision. That is basically the consensus among a lot of the notes that I've seen. But if we take a step back, there's kind of this existential crisis that the Fed is facing with the dot plots themselves. This is a messaging tool that was implemented towards the end of the accommodative chapter of monetary policy, where the Fed basically wanted to message what its future was going to be in terms of its rate hike path. This was basically a way for the Fed to say, look, we're at the zero bound right now, and that we want to let market participants know exactly what to expect in terms of rate hikes going forward. But the problem is that the Fed has seen that this dot plot usage has basically made the market rely on the projections that they have going forward, when Jay Powell, for example, has said that sometimes the median projections in these dot plots aren't necessarily reflective of what the actual consensus is among the Fed. It's basically like saying, look, we have a punch bowl that we're going to gradually take away, but that commitment isn't always set in stone. So Powell has described this as a collateral confusion and has messaged that this could actually be something that goes away as they continue to review the types of tools that they use in the SEPs going forward.
And Brian, Melody here, so excited for your trip to D.C., but just give me a sense of what the market reaction is anticipated to be, because as we see today, markets have been trending higher. They're feeling very comfortable. Could we anticipate any kind of shock waves that Powell could generate?
Yeah, I think comfortable is the right way to describe it. I mean, the consensus is that there's going to be no rate action tomorrow, but I think markets will be very tuned into specifically any sort of commentary on the balance sheet normalization process. The Fed has messaged for the past few weeks that it could announce, for example, the timing of when that process might end. That would give markets some new information that it didn't have ahead of this meeting. But as far as the rates, nothing new is expected here. But obviously, because this is a unusual March meeting that for the first time will have a press conference with Fed Chair Powell. Well, actually, normally the March meeting does, but he does do the press conferences every meeting now. We will be listening in very closely to see whether or not he provides any sort of granularity on the timing of that normalization process and also what the balance sheet might ultimately look like, which is kind of a forward-looking question.
Great. Thanks so much, Brian. Enjoy the Amtrak.
Thanks.